Hey traders, Nick Shaheen here looking at Roblox. I've had good luck trading this company, and the reaction to the earnings was negative. Maybe it was because it was a negative day, first red day in a while. Actually, I shouldn't say that. There's still a couple of hours to go, and they may shrug off another 1.5% drop into a green record close like they did yesterday in the S&P. All right, talking about this guy in particular. Quite a few things to talk about. First of all, this is a buyable dip from the chart perspective. This is a buyable dip from a fundamental perspective. This is not a hard floor because it has to trade inside the whole market perspective. Okay, so on its own, if it traded in a vacuum, this is a great opportunity. So what would I do in a big drop day like this one? I would prefer to sell puts to own shares because the VIX is up gobs, and the puts of this particular stock at the open were down big. The stock was down big, so the puts were inflated. So that would have been the perfect opportunity to sell puts. And if somebody did that, they could have booked the profits already if they wanted to. Anyway, so let's talk first of all the chart. And all I see is this is a daily chart, so it's relatively new to Wall Street. And you see candles down here, just wicks. So they told you they rejected these lows. They opened here, and now they're up here. So they're leaving a tail, but it looks like it's inside these tails that had left before, but not really, because if they close up here, the lowest close is still this one fantastic candle that I see here. When was that? 7/27, which is a weird date for a whole bunch of Momo stocks like that. So the low of the close was 76.20. And they are still closing above that. Yeah, they dipped below it, but they have done that before. This candle itself was pretty fantastic, and where it ended says where there is secondary support. So the first support is right here at 76, give or take a few cents. This orange line is not me drawing it, it draws itself. This is literally the heaviest, busiest spot on the chart based on price. So anywhere below that, and people step up to trade it. So in essence, this volume area here was busier than up here. So this one up here was too frothy, did not have the chance to consolidate. This one here has. So now we have the fight of the bulls and the fight of the bears, and they're stuck in the middle. So the bulls will need a reason to rally. The bears will need a very good reason to fall. So the best thing to do is to sell put spreads and try to create income while you wait, or sell a put to actually buy shares. And if you don't get to buy shares, then you create income. That would be my strategy on this one. Had I caught it first thing in the morning, I would have sold naked puts to own shares and closed them probably later on today. Fundamentally, I mean, the P&L looks strong. I don't know what they said that spooked people. Anything that has to do with gaming, anything that has to do with subscription, anything that has to do with kids, it's going to be doing well for a long time. Probably touches up on esports somehow, so the fundamentals are on you. What I see is the P&L, which tells me there's a good story to tell there, regardless of what business they're in. They could be hauling garbage, while I'm concerned, but I know they're not. And you have the technical analysis that also says, okay, it's a level that is pivotal. Like you can see a clear breakout, and now they're testing it for flooring. Not a hard line in the sand, but a whole zone has been rejected for quite a few times already. I'm encouraged by the price action. And if I'm holding the stock and I capitulated today, I'm not paying attention, because if I had looked left, I would have seen that they rejected it on a really bad day. 7/27 was pretty bad. And then another bad day, August 3rd. And a bad day before that on July 19th, and a really positive bullish day on May 20th. You can see the bottom of that candle. And this has played a role before. So not a place to capitulate out, panic out, start shorting. That would be wrong. So I could get smarter by getting shorter time frames if I'm an active trader. So here I can tell you that 82 will face selling, as will 85. I'm rounding. It's 84.50 to 86 change. So for the same reasons it found support based on volume profile, on a shorter term, the volume profile works against it because the more recent action is going to be resistive above here. So there will be sellers lurking at between 82 and 85. So at 82.5, I can see it, and at 87.20 for sure. And then that repeats higher levels as well, but one step at a time. And this is a 2-hour chart. And you can see here where they rejected the lows, and again today, and on a headline. So let's get that out of the way. So they okay. So they got a worse earnings than expected. But who cares? It's a growth company. So tell me what they did to the sales. So I got curious and I paused this video and I went and checked out the headline. All right, so yeah, they had a bigger loss, but they increased revenues by 126%. So tell me how you can grow a company while pinching pennies. You can't. Amazon did not pinch pennies for a decade, and they fought it all along the way. Oh, you got to be more profitable. Like, who are these people? If you're evaluating a growth company based on how well it's profitable, you're like completely wrong. It's like, you know, judging a bodybuilder based on like how well they play chess. It's the wrong time. This is not the time you ask for them to be profitable. You ask them for profitability. You ask for profitability when you stop seeing growth. Then you start saying, "Hey, you know, I've given you leeway. I've priced you at X% of price to sales." Speaking of which, okay, so price to sales is like 38.70. Back in June, it was 50. So it's improving because of the growth. The growth will bring the price to sales in line, because there will be less hope in the stock price, because they're actually putting up the numbers. Now that I noticed, if you lose this level, you have a head and shoulder-ish pattern that has about this much danger from here. So this zone is attainable. And what is this? This tells me go out and see if you can buy the dip. For me, an alert. So this one will say, uh-oh, kind of trouble coming, with a couple of more places to stop, but the neckline was probably, if you draw a line somewhere like this. Anyway, it's not a perfect head and shoulders, just the spirit of it. A descending channel, if you lose a neckline, you might carry lower. But that will probably require the whole market to get there. I don't know if this one will do it alone. Anyway, enough jibber jabber. You get the idea. I wouldn't follow the herd. Because everybody's selling it, I shouldn't get out of it. I should just use my own intellect and determine. The P&L shows improvement. The disappointment was in the actual estimates of profitability. So first of all, it's the estimates. Look, who cares? What if the person estimated was wrong? And then it's about earnings. So it's not even like they missed the estimates on sales. And then I read another headline that said they have a growth problem. Yeah, they're growing too fast. They're spending too much money and growing too fast. I don't know what I didn't even read that article, but 126% growth year over year. I don't know what else you want. And over a COVID year, which should have added gaming, I guess. I don't know. Use your own intellect. Don't follow the herd. Oh, subscribe to this channel if you don't already. It's free so far. There is a card somewhere floating, probably on the upper right hand corner, where you can request your own videos if you want. Tickers, it's free. Go there. So far.